Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the gold market. So currently on the technical side, maybe the picture is not very interesting, at least on the daily, on the weekly time frame, while the fundamental background and sentiment background, it's a bit tricky on the gold and has lots of excellent features that you need to know to clearly understand what's going on currently, because in fact we have two sides of the public opinion, investors' opinion on the gold market. So lots of upward spikes and attempts to go higher on the gold market is triggered by investors who thought that global economy is turning to the stagflation stage. They appeal to slow down of the growth in China and in the European Union. And also they point additionally on the rising on inflation. This combination leads us to conclusion that market and global economy is coming not to reflation, but to the stagflation stage. Just to remind you, stagflation, this is actually one of the latest parts of the economy cycle, when the economy shows slow but stable growth effect and with the high interest rates and high inflation stages. We think that this is not correct treatment is because of the few things. Because to understand why the China is showing a slowdown and why the European Union as well, mostly it comes first from the political reasons, as the China denied the supply from the Australia of the coal, and that leads to the energy collapse on the north of the China. That in turn needs the replacement. The coal delivery needs the replacement. And this is the reason why the all liquid gas currently is turning and supplied to the China, because they actually pay 2 times greater than the overall market price on the, in the global economy currently stands. This leads to the deficit of the gas in Europe and leads to the high prices on the market for natural gas as well. As Europe hasn't launched yet the Nord Stream 2, they feel some lack of the not enough gas delivery. And this also impacts on the economy. So as you can see, mostly this slowdown has, well, maybe not totally, but really big component of the slowdown is artificial factors that stand currently on the market. And we're, from that standpoint, we're not agree with the stagflation understanding of the current situation. But since this opinion is widely stand on the market, this leads some, from time to time, additional demand for the gold. We think that the economy stands under inflation, and soon we should get the confirmation of that. Currently, actually, we already have. So just take a look what's going on the crude oil market and what's going on in copper and other basic metals. This is not typical for the stagflation stage, when the commodity markets usually stands flat or even slightly turning down. That's the moment that actually is very important for current understanding of the long-term situation on the gold. Second moment is gold market currently is very sensitive to policy of the interest of the central banks. And when the massive starting on the rate change, and we know already that Bank of England stands at the edge of the interest rate change, the Australia, Canada, maybe New Zealand also stands very close to the changing of the interest rates. As countries that, get the big advance from the selling of the commodities, especially the crude oils in Canada. So, and that will be definitely negative for a gold market. Speaking on the short term, so everything you could read in the weekly report that we have prepared, so the subject we have discussed this week in the report. Speaking about the short term, since we have the first central bank meeting on the horizon, this will be on Thursday. We think that Thursday will be the culmination session for the gold. Because in the European Union, inflation also hits the all records. And as the United Kingdom already has announced, mostly it is guaranteed that the first rate change will be in November, European Central Bank might change something in the rhetoric. If rhetoric will be hawkish, that will be negative impact for the gold market, I suppose. And all the performance that we see here could be reversed in the blink of an eye. This is what about the sentiment and the fundamental background. Speaking on the technical side, the overall performance that we have here, well, makes me worry about better to say, I can't accept this type of action as a bullish one. So even from the perspective of the hand and shoulders that we talked previously, the action in this circle, it's a torted shape of the hand and shoulders, so it should be absolutely different type of action here, where bulls should have the domination power and push price higher. Here we have some kind of the retracement type of action, very choppy, sloppy, and with a lot of deep retracements. This is not the shape of the reversal. Sentiment on the market hasn't changed. So if you'll take a look at the ETFs, if you take a look at the SPDR fund in particular, it's losing the reserves. So it doesn't support any upward action here while reserves contracting. That indicates that overall sentiment is also not the bullish. And this makes me think that, well, we can't be guaranteed against the appearing of the butterfly here. It's really possible. In fact, to speak about the bullish sentiment, market has to at least break the 1850 area to the upside. At least, because even 1850, it will not be the breaking of the major tendency. But for the major breakout, market has to climb above this top. In this case, the tendency of the lower lows and lower highs will be broken, and we could speak that maybe indeed something is changing and market turning to some bullish activity. Until this won't happen, we can't treat this performance as a bullish actually. That's why we think that gold market currently is not suitable for taking the long position, especially for a long-term investment. And currently, even on a daily chart, personally, I have no real inspiration to buy gold at this moment. So until I will not see the clear signs of the breakout here. This is what we have on the daily chart. I think that we should wait for Thursday, where actually might be really important action on the gold market. On the lower time frames, if we'll take a look at the 4-hour time frame chart, you will see that our triple to sale pattern has turned to the butterfly. This market completed the butterfly, and on the comments on the Jerome Powell, market reversed this action totally. So the thing that the first glance seems that gold has found some ground and showing the upward action finally. So maybe something really happens and we will get the breakout. Well, expectations have been deceived, and as you can see, this market closed on the negative note the previous week. So that is very important point for the bulls as well. Until market will not taken out, we can't consider any taking a long position. So actually currently everything depends on this huge engulfing. So market has to play it out with the, for example, drop back to the support line or somewhere to the 1770 area to complete the target of this engulfing pattern in the shape of, let's say, some kind of the ABCD pattern, or market has to cancel this pattern with the movement above the top. Until one of these events will happen, we do not see any background for taking the long position. For the bears, the situation is a bit more simple, so it's also some trickiness exists around this pattern, but it is easy to act around it. So if you consider taking the short position, you could just watch for this drop on the hourly time frame chart and follow the classical approach to the trading of the engulfing pattern. You need to wait for a pullback to some resistance level. For instance, it might be 18 even, with the stops above the top, it is possible to consider downside continuation, but be aware of any fast opening action next week. So if you will have a straightforward upper candle, do not be short, so just ignore this trade. Because I will show you on interest rates, we have a bearish reversal bar on the daily chart. It suggests that rates could drop more, and that definitely supports the gold. This is the tricky moment with the trading of the gold market next week. You can see lots of pitfalls exist there, and the most interesting price action should happen on Thursday. And it's not simple currently deal with this market because it's very chaotic. Opinions are different on the market, and well, it is very sensitive to both direction actually. It reacts very sensitively to any changes in the environment, for example, changing in interest rates, some speeches, or something of that sort. But we have what we have, and we have to deal with it anyway. So that's our view on gold, and let's see what the impact will be of the central bank meeting, European Central Bank meeting on the gold market.